market corrects some more, sure, absolutely that is possible, but not likely at this point without a little bit of a reflexive rally first. And here's what you need to know before the bell this morning. As we talked about in July, we were expecting, as the markets were hitting this peak, that a correction was due and that we would have a 3 to 5% correction. Well, as of last week, we've basically completed about a 5% correction roughly, and we're coming down to retest that kind of support right there at the 100-day moving average. So again, everything here so far has been completely normal in terms of this correction. And again, it's what you would expect in any given year. Could the market correct some more? Sure, absolutely that is possible, but not likely at this point without a little bit of a reflexive rally first. As we talked about in this past weekend's newsletter, we would expect a bit of a rally this week, just nothing more than really kind of an oversold bounce. And this is because the markets are getting fairly oversold on a relative strength basis. So we've kind of really worked off a lot of that overbought condition back in July when the markets were kind of running at their peak. We've now worked a lot of that off. Sentiment has also reversed. We saw a lot of that more bullish sentiment now kind of pulling back both retail investors as well as professional investor sentiment. That's now kind of come back to more neutral areas. So again, a very quick reduction in sentiment, a sell-off in the market took markets from overbought to oversold. So that kind of gives you that fuel that you need for a bit of a rally here over a few days. Now, I would use that rally at this point, anything back up to 4440 on the S&P 500, which is where that 20-day moving average is currently kind of sitting. I would certainly use that rally for a bit of risk reduction. Rebalance your portfolio risk a bit if you need to. Rebalance your holdings a bit if you need to. Just kind of think about where we are heading into the end of the year. And then we'll probably get a little bit more weakness in the month of September. As we kind of go through that period. September tends to be a bit of a rough month. And again, if Jerome Powell is much more hawkish at Jackson Hole, that could also lead to some additional weakness in the month of August as well. The month of September as well. So again, doing a little bit of work on rebalancing your portfolio risk, etc., would not be surprising. Now, another thing here also too is that in bullish trending markets, which obviously we've been in since October, the MACD sell signal oscillates, and we talk about our MACD signal, which is the moving average convergence divergence indicator. And that just basically measures the spread between two moving averages. That oscillates kind of up and down. So from a high level, you get a sell signal. It's a good opportunity to reduce some risk in portfolios. That's what we were talking about here back in July, that we had that sell signal, and that suggests a little bit of risk off move for the markets. We're now getting fairly oversold on that indicator, kind of towards the normal bottom of its oscillation range during a bull market. So again, when markets are trending higher, the oscillations tend to be a lot narrower than what we see during bearish markets, where you have much bigger oscillations at that time because prices are falling pretty quickly. So again, back during bull markets, we have fairly narrow kind of oscillations in that indicator, and we're back towards that kind of normal low for a bullish trending market. So all these things kind of line up to suggest we're due for a rally here. We could trigger a short-term buy signal. If you need to add some portfolio equity exposure, probably an okay place to do that here over the next few days. But be aware, we're probably going to have a little bit more volatility risk in the month of September, a bit more sloppiness, weakness. So again, be a little bit cautious here, kind of measure your risk accordingly, rebalance portfolios as you need to. But again, there's nothing wrong with this correction. I've seen a lot of real bearish headlines like, bull market's over, bear market's back. Nah, not really. This is just that correction within a bullish trending market. Nothing's really changed at this point. So just manage risk accordingly, and then we'll just navigate it as we go from here. That's what you need to know before the bell this morning.